Hi, this is Charles Kelly, Money Tips Podcast. More misery for mortgage and homeowners today as the Bank of England have again hiked rates. They've again put up rates for the 12th successive time, this time by 0.25%. Widely expected. They followed the US and the European Central Bank and raised rates to 4.5%, the highest rate since 2008. This is to combat inflation, which they don't seem to be able to get under control, which is over 10% in the UK. It is falling in America to less than 5%, but here it seems to be sticking around. Ironically, the Bank of England Governor Andrew Bailey, the guy on £500,000 a year, who fully understands people's hard times with these interest rate rises, of course he does, he said that inflation is likely to come down, that the wholesale gas prices, which have come down a lot in the last 6 months, will filter through to our own homeowners and own domestic users and business users, and that means that inflation will start to come down by the end of this year. So why are they hiking rates, and why are they hinting at another rate rise again this year before they eventually come down? Well, the answer is they can't seem to control the inflation that they caused. Yes, they caused it. They printed all this billions and trillions of dollars and pounds and euros. They threw a load of money at people who wanted to stay at home during lockdown. They have printed a load of money to send weapons to Ukraine and all sorts of things after they said, well, there's no money left for anybody else. But they have created these situations. And it's not just in the last couple of years. This is this quantitative easing, this new term that we heard after the last financial crash, which was to save the markets from crashing then. So the markets haven't really had a proper crash. That's why I think when the stock markets do have a crash and the property market has a crash, it will be a long, hard one that we haven't seen maybe since the 90s, when I remember it going down hard and staying down for 5 or 6 years, and lenders saying, no, we can't lend in Docklands, it's not suitable security. And experts saying it would take 20 years to recover. Well, it didn't take 20 years, but it took a long time to recover. I remember having a property that I lived in, a new build property that I bought at the end of the 90s. It took 6 years, at the end of the 80s, it took 6 years before I got my money back on it and was able to sell it because it was too small. It was able to sell it to buy another place. So that's what's been happening here. Many people's mortgage costs have already doubled and trebled in some cases, and now they're going to go up again, especially if they're coming to an end of a fixed rate or they're on a tracker rate. What can you do? Well, this is a whole subject really, but one of the things you can do, certainly the thing you should do is contact your lender and say, how can you help me? Maybe they can extend your mortgage, maybe they can put you on an interest-only mortgage, maybe they can give you a short mortgage holiday, but other than that, I don't think there's a lot they can do. So maybe we have to think of ways of earning more money. Now, if you like my content, and and I hope you do, if you're watching, please like and share, and please join me for some free training on how to get control of your money, how to build wealth for the future. And on this, I'll talk about these sorts of things as I do also in my books. Yes, Money Can Buy You Happiness, and Borrow and Grow Rich. So what else has been happening? Well, as I said, I hinted there that inflation's come down in America, so it seems to be getting under control here. I'm not sure why it isn't under control here. The Bank of England governor admitted that food inflation is 19%. We know it's more than 20%. We've known it's 20, 30, 50% in some cases, and we've known that for quite a while. He also said that these gas prices will be passed on to the consumer. What he didn't answer is what he hasn't really answered is why it's taken so long from wholesale to retail for the gas prices to come down. They go up like a rocket and then they come down like a feather, don't they? Like the oil prices. But hopefully inflation will be coming down by a percentage or two very soon, and I think that will be the case. So the housing market is taking another batter. It's already slowing down. I run an estate agency, real estate side business as well, and that's slow. I mean, I have to say, I know when you're in business, you're supposed to say, everything's awesome, everything's great, we're doing great. Yeah, we're hanging in there, but you have to admit the market is slow. Properties are taking longer to sell. A lot more reductions coming in. One survey on Rightmove showed that 50% of the properties in their area, if you exclude retirement flats and new builds and flats, were reduced in price. That actually had to be reduced in price by that's 50% of them have taken a price reduction. I know I'm getting a lot of calls from estate agents and emails saying we've reduced the price of this, we've reduced the price of that, sometimes by quite substantial amounts, sometimes by 10 or 15%. So things are slowing down. and this is not going to help. So the Bank of England then want to control inflation. I think they've caused it. Their chief economist, Hugh Pill, said about a week or so ago, people should expect to remain poorer and should not ask for pay rises, and companies should not be putting up prices because it will spoil our inflation target. Come off it. This guy needs firing actually for saying that. What did you think we are, the peasants or something? And he's sitting up there like Marie Antoinette saying, let them eat cake. It's really is a joke. But that's just, sorry, it was my little rant for the day, but I don't think he's fit to do his job. So they haven't got many ideas. They've got this 2% inflation target. Don't forget, it's at 10%, 5 times that. So to bring that down to 2% is a big job. Now, I think the target comes from the government, to be fair to them. But he just kept reiterating, we've got to keep going until we have the 2% inflation target. You know, when is this target? I mean, when you have a target, you normally have a date by which you want to achieve that target. You don't just say, well, you know, I want to score 50 goals. You say, I want to score 50 goals this season or in the next 5 years. You don't just say forever, you know. So I don't know when this target is actually supposed to take place. They also, on one of the questions, which were pretty tame by the press, they said something along the lines of, well, our forecasts are conditional. They move with the times. So they put a forecast up, but if things change, they change the forecast. You can't make this up. You couldn't make this up, could you? So they give a forecast. We're all supposed to listen to it. Businesses listen to it. And then they say, well, the forecast will change as the market changes. It's just unbelievable. These guys have got no idea what the business is really about, how to create growth, how to get us out of this problem. They've got no idea. And although we're not officially in recession, many people feel like they are already in recession. Many ordinary people are out there suffering. So that's, I just want to give you a quick rundown on what's going on. You might be watching this the day after, the next day, or whatever. But, you know, interest rates have gone up in now. 3 central banks have put up interest rates. I was speaking to someone in Malaysia the other day. They said the same thing's happening there. So it seems like the world is moving all together. It's all been orchestrated by somebody. Conspiracy theories coming in up above, orchestrated everybody. I don't know, but it does seem it's moving. And in the meantime, as I said a couple of weeks ago, gold price jumped up. You know, perhaps nervous about market conditions, and that's when gold price jumps up. Now, if you're in the stock market, if you've got money in the stock market, I would be cautious at the moment, especially if you've got your pensions, your life savings in that stock market, because if it goes down, it could take years before the value of your fund recovers. Say it goes down by 40 or 50%, and you've got 100,000 in there, you've lost £40,000. Now you can hang in there, like the advisors would say, don't worry, stay with, you know, hang in there. Now, yeah, it will come back eventually, but it could take 5 years, it could take 10 years, we don't know. So if your pension fund is purely in stocks and shares, I would look to consolidate some of the gains you've made in the last couple of years and maybe think about where the rest of your money is going in the future. In other words, consolidate it means talk to your advisor and maybe move that into cash or move that into a safer fund that cannot go down to lock in those gains. But again, take financial advice on it. Don't just let your advisor sit there and then tell you afterwards, oh, well, you know, don't worry, everything will be all right, just hang in there. No, I never hear stockbrokers or market analysts talk about downturns. They only say that, you know, the market will slow down, but it would trend upwards. Just like you don't hear big estate agents saying that property prices are going to come down. But I know they're coming down. I've seen them coming down. And I think as the figures, property takes longer to come down, but as the figures come through, you'll see that, you know, year on year, they will be down. I've no doubt about it. On the other hand, good property is selling. If you've got a really nice property in a nice area, it's desirable, that will sell. People have got money. There's always people out there who've got money for the right things, but they're not paying for, you know, average properties, and at the bottom end of the market, you know, people are struggling to get the mortgage. Now, on mortgages, I may have mentioned already that the Skipton building site have launched a 100% product, 100% mortgage, no deposit, but it's fairly restricted in the terms, so you want to look that up. The rates will obviously be a bit higher. They'll be looking for renters who've demonstrated a good rental record over the last 12 months, and then they'll lend 100%. Now, it's a bit of a headliner. It might be harder to get this kind of mortgage than you think, but it just does show that some lenders are trying to be a bit more flexible, and a lot more lenders are lending longer term now. You know, instead of the traditional 25 years, they're lending 35, 40 years even, to keep people's payments down to a minimum. I talked about it on a previous broadcast about extending your mortgage payment and then maybe catching up later to pay that off earlier. So thanks very much for listening. As I said, if you like my content and you want to hear more and you want to learn more about how to manage your money, how to grow wealth over time, how to make the best of your money, and how to build real wealth and become financially free, do check out my free training in the link below and join me on a free webinar where I'll take you through the ins and outs of how to get control of your money, how to build wealth in the long term, and how to become financially free, and lastly how to maintain that consistency and mindset to keep it all going and keep it all together. Thanks for listening. This is Charles Kelly Money Tips. I will see you again soon. Bye for now.